Hey there and welcome to another video. My name is Hugh, and if you're trading or learning an RSI trading strategy, then this could be the most valuable video that you could ever watch. And that is because I'm going to show you how to verify and optimize an RSI trading strategy. And the best part is you don't need to know how to code. All right, let's get into it. All right, so here's how this video is going to go. The first part is going to be about verification, and that's if you have a trading strategy but you haven't properly tested it yet, then I'll show you how to test it. There are free ways, there are paid ways, and there are automated and semi-automated ways to do it. So these tips will really help you speed up the backtesting process. You don't have to sit there all day and just do backtesting. And remember, this step is very, very important because you need to know the performance of your strategy, how it performs, how many maximum losers are going to be in a row. And once you have all these metrics, then you know what to expect and you can have more confidence taking trades. Now, the second half of this video is going to be dedicated to optimization. So I'm going to give you some ideas on ways that you can optimize your trading strategy. And remember, regardless of what anybody says on the internet, the key here is to customize the RSI trading strategy to your personality. And the other person on the other side of the screen on YouTube or on a blog post or whatever may have their method of trading RSI that works for them, but you need to figure out what works for you. So the optimization part will really help you get some ideas on things that you can tweak and things you can put into your trading strategy that can help you make it more profitable or possibly make it win more often, higher win percentage. But again, remember that if you have a higher win percentage, your win per trade is usually going to be lower. And if you try to get a higher win per trade, then your win percentage is probably going to be lower. So there's always a trade-off. There's no free lunches. But again, it's all about tailoring the strategy to what fits you. All right, now let's jump into verification. There are different ways that you can verify that a trading strategy has an edge. And I'll start off with the simplest, cheapest way to do it. And this method is totally free. You don't have to buy anything. You just need a spreadsheet program, which you can get for free on your computer, or you can use something free like Google Drive. All right, with the free method of backtesting, you just need a spreadsheet. I have a spreadsheet available. There's a video here or a link there that will give you the download link, and I'll give you a free spreadsheet that you can use to backtest. And all you do then is just download a copy of MetaTrader. Just go to any Forex broker, simply sign up for a demo account. It's free. It's play money, so you can practice, you can learn the steps, and download their free MetaTrader, either MetaTrader 4 or 5, it doesn't matter, and then start playing with it. So what you're going to do if you're using this method is to add the RSI. So that's going to be here. You're going to go with oscillators and then relative strength index, and then set this up to whatever your strategy says is a good setting. And then you're going to scroll back on the chart, and then you're going to start testing by moving one candle forward at a time. And when you see a trade come up based on your strategy, you put the trade into the spreadsheet. Then at the end of the backtesting session, you just accumulate the results and see how you did. Here, it's very important to make sure that you use as much historical data as possible and be as accurate as possible, be as honest as possible. Would you have actually taken a trade there, or would you have just passed on that one? And that's very important because in a real life situation, you're not going to be able to go back and double check it, right? Or have the luxury of going backwards like this. So make sure you're as honest as possible, and you want to scroll back as far as possible on the chart. Now this can get a little bit tedious. So one trick here is to hit enter on your keyboard, and you'll see this little box appear in the lower left corner of the chart, and then just put in the date. I have a video on how to do that here. And when you hit enter, after entering the date, it'll skip you back to a historical date, and you can start testing from there. All right, the final thing to remember when backtesting with MetaTrader and using the free method is to make sure you have enough historical data. A lot of brokers will only give you a few years, and that's fine because they don't want the download to be too big when you download MetaTrader. So in order to do that, or in order to get more data, you're gonna have to go into Tools, History Center, and then go into the currency pair that you're trading. You can double click on the time frame that you're using. So for example, if you're using 1 hour, you can hit download. That'll download the data, and I have a video that shows you how to do that here. But that's how you get all the historical data for that currency pair. All right, so if you have any more questions about the free method of backtesting with MetaTrader and a spreadsheet, There's a video here that can help you with that, so be sure to look at that. Now, obviously you have noticed that if you did this method, it would take quite a while to backtest a trading strategy, especially if you went back to maybe like 2001 or 2003 and you had to go forward manually and then update your spreadsheet and then look for the next trade, right? So a better way to do this is to actually use dedicated backtesting software. Now, my favorite backtesting software is Naked Markets, and that's because it allows me to backtest manually. It gives me good statistics on my backtesting results, and it also helps me do semi-automated and automated backtesting, which is awesome. Now, it does cost a little bit of money, but remember that if you want to be a professional trader, you're going to have to spend some money on some education, on the right tools. And that goes for any profession, right? In any profession, if you want to be a plumber, for example, you're going to have to buy some good wrenches. That's all there is to it. And in the same way, you can't expect to get good quality software by just trying to get free stuff, right? So if you spend a few bucks, it's usually around $200 or so, and that will get you started on the best backtesting software I've ever used. All right, so now you've seen the free method. Now I'm going to get into the paid method, and this is going to speed things up dramatically. Now, there are several different programs out there. I prefer Naked Markets. Forex Tester's all right, but you can't use something like TradingView because it doesn't have enough historical data on the lower time frames. Now, if you're doing a daily chart strategy, then okay, yeah, I think TradingView is usually good enough for most markets. But if you really want historical data that goes way back, then you're going to have to use something like Naked Markets. All right, so here's an RSI trading strategy that I actually backtested in Naked Markets. And now I'm going to step you through the 3 ways that you can backtest in a software like this. You can do the fully automated way, which is much faster than the free way. But then you can also do semi-automated and then fully automated if you want to. So the first way to do this is manual, fully manual. So what you can do is just start a new backtest, and then we'll just leave the defaults there. And then let's say we want to backtest something like the Euro US dollar. As you can see, there are a lot of different markets that you can backtest. So that's great. There's indexes, stocks, futures, metals, all that kind of stuff. But we're going to stick with good old Euro US dollar. And as you can see here, the starting date is back in 2003. So this gives you a good indication of how the trading strategy works over a long period of time, because you want to see different market cycles. A big mistake that traders make, or new traders make, when they're backtesting is they only backtest over a year or like 6 months, and that's not enough to see all of the market cycles. So that's where something like Naked Markets comes in very handy. So I'm going to do next, finish, and then it's going to open the chart. So I'm going to move forward a little bit so you can see the candles. And then now I'm going to add on the RSI indicator. So RSI is right there. Just use whatever settings make sense to you. And there you go. Okay, so as you move forward, you can see that the chart will move forward. You can see the RSI moving. And let's say that we want to take a trade if it goes overbought or oversold. Let's see. Okay, something like that, right? Maybe you want to sell there. I mean, that doesn't look good, but just as an example. So sell order. You can set up percent risk, lower lot size. I'm just going to use one standard lot since this is a $100,000 account. You can set stop losses if you want, set take profits. Let's set a take profit. Let's set a take profit there, and then maybe set a stop loss up there, right? So you can sell like that. And then as you can see, that got stopped out. So that really speeds up the process because the software handles all of the accounting for you. As you can see down here, that was a 1% loss. And you don't have to do it manually in the spreadsheet. All right, another great thing about software like this is it accumulates your trades and does the calculations for you. So I'm going to go back to this other backtest that I did, and then I'm going to go to statistics, and I can open the stats for this backtest. So I'm going to do this, and you can see all of the statistics on it. You can see it broken down by month, by year. You can see overall stats like all this stuff that you might want to look at. You can do symbol analysis if you're backtesting multiple symbols at the same time, and you can do that. You can also backtest multiple time frames at the same time, so you could have the daily chart open here and the 4-hour chart open here. that's possible. Then you have timing analysis. When are the best times to enter trades? When are the worst times to enter trades? Then you have risk analysis, your risk of ruin, your maximum adverse and maximum favorable excursions. That means how much did price go in your favor or against you while the trade was open, and that can help you optimize some of your trades. Then you have the overall trades list, and then you have a Monte Carlo simulation, which is huge because it puts the trades in a different order, so you can see what your maximum drawdown would be if your trades were in a different order, and that can give you some insights into maximum risk. So I'm just going to launch this as an example. And as you can see, the average drawdown with all these simulations was about 12%, which is pretty good. And the worst drawdown is 20%. So if you actually start trading this system, you can expect about a 12% drawdown most of the time. And if it gets over 20, then you probably should be concerned and take a look at, is there a problem with the strategy, or is it the way you're trading it or something like that that's causing it to go over the worst drawdown in the simulation. All right, so that's the manual way of backtesting with backtesting software. All right, I hope you can see that using backtesting software is going to speed up the process significantly over using the free spreadsheet method. But now I'm going to speed it up even more because it is possible to do semi-automated and fully automated backtesting with this software. So with the RSI, for example, the traditional way that RSI is taught is that you buy when it's oversold and you sell when it's overbought, right? So when the RSI gets above this level, either 70, 80, or 90, you sell. And if it gets lower than this level, which is 30, 20, or 10, depending on which settings you're using, then you would buy. So let's start there because there are so many different RSI trading strategies out there. So I'll just use this example, and you can use this example if you're doing other types of RSI strategies like the 50% crossover or whatever you're using. So let's start with identifying when price or when RSI gets above overbought or below oversold. So if you just did it manually, you could do like that, right? And then take a trade. But with this method, you're very likely to overshoot it. And then you're gonna have to step back, which is not ideal because you already saw what the future looked like. So one thing you can do is have a setup rule that identifies this condition of RSI being higher or lower than the signal level. So the way that you can do this in the software is to go to the rule manager and you can set up a rule. So I want a setup rule, and the setup rule is basically the setup, right? It's what criteria will cause you to enter a trade, and you can put that into definite rules. So you go new rule, and then let's say I'm going to call this RSI, and this is going to be setup, and then you should make one rule for longs and one for shorts. So let's call this RSI short. Okay, and that's just an example. That's a setup rule. Say okay, and this is where you're going to set up your setup rule. Okay, so the first thing I want to do is add another core rule here for the condition. So that's going to give me core rule operator core rule, and that's going to allow me to drag and drop things in here, and I don't have to code anything. All right, so the first thing I want to look for is if RSI is greater than the overbought level, right? So let's just use the default level of 30 as I'm sorry, not 30, but 70 as overbought. So I'm going to say RSI, and you can set up the RSI settings here. I'm just going to use the default. The thing that you're probably going to change the most is this period. So if you're using a shorter or longer one, that's fine, and you can experiment with those optimizations in the optimization section. But for now, let's just use the default. So I'm going to do that, and then RSI operator is going to be greater than, right? So I want it to be greater than, and then I'm going to put an input value here, and that's 70, right? So RSI is greater than 70. All right, so now once this condition happens on the chart, I can do several different things. I can enter a trade automatically, and that will allow me to do automated trading or automated backtesting. But for now, I'm just going to start off simple not get too complicated. What I'm going to do here is I'm going to set it so that the chart pauses, and this will allow me to look at the chart and then decide if I want to take a trade or not, and then take the trade manually. So this is semi-automated because it's identifying the setup, but I'm going to have to enter the trade myself. So that is set there. Now that's going to appear under the setup rules here. So instead of making an entire new one for the opposite rule, I can just clone this rule, and then I can open that and then rename it as short, or I'm sorry, long. Rename the short to long. Okay, and then I'm just going to change this here. So this is going to be 30, right? Because that's the lower level. Okay, and then I have to just change the operator, right? So that's going to be less than. Okay, and the action is still going to be the same. I'm just going to pause the backtest. So I'm going to save the rule there, and then I'm going to go back to the chart. Now, in order to implement these rules on the chart, I simply just drag and drop. So I'm going to drag the short and the long rules, and as you can see, those are the active rules there. So I'm going to move the chart forward and see how this goes. Okay, so since RSI is below, well, let's get rid of this other RSI because it automatically puts in an RSI, and I already had one. So okay, there we go. So there we go. It's off to the races, and then it's moving forward, and then it stops whenever it gets overbought or oversold, as you can see if it gets above this line. However, I'm sure you've noticed that there is an issue here, right? Because every time RSI is above, it's going to pause, and that's not what we want. We want RSI to, we want the program to only give us a signal the first time it pops into overbought or oversold, right? So that is something that's easily fixed, and you can use this with other types of indicators like this too. So just go back into here, open the setup rule. Now, in order to only identify conditions where the RSI first gets into overbought or oversold, we're going to have to look at each candle, right, or each bar. So if this bar is in overbought, for example, we're going to have to look for the previous candle to see if it's not overbought, and that will allow us to identify the condition where it first pops into overbought. Now, if it's overbought and the next candle is overbought, then this will not trigger because the previous candle was also overbought. So this is easy to add. So I'm just going to add another condition here. Actually, I need two conditions. So I'm going to add an AND here. So I want this to be AND. And then I'm going to do RSI again. Okay, and then I'm going to do previous bar. So previous bar 1 means you're going to look at the previous bar 1 candle back, or 1 bar back. And then keep all of the parameters the same as your other RSI. Hit OK. And then I'm going to say greater than, because I want it to be the opposite of this one, right? So I'm going to go greater than, and then price value input is going to be also 30. Okay, and then it's going to pause when it does that. Okay, so I'm going to save this rule. Yeah, I can reload it. Okay, now I'm going to work on the short side. So this, I just add that again also, and then I do an AND here, and then RSI there, and then I'm going to do previous bar. Okay, and since this is a greater than, I'm going to do a less than on the other side. Okay, and then input of 70. Okay, so I hope you can see that this is super simple and you don't need to know how to code, and it's very easy to set up these types of rules. So I'm going to save the rule. It's going to reload on the chart. Okay, now I'm going to close the rule manager, and I'm going to go back to the chart. The active rules are still there. We updated them, so let's go for it. Okay, so now Oh, the RSI is not on there for some reason. So let's reset this, delete all or detach all rules, and then we'll add this back in again. Okay, there we go. All right, so let's see if this works. Okay, now it decides not to go overbought or oversold. Come on, you can do it. Okay, there we go. So that's the first entry into overbought. Now let's move it forward again. And as you can see, it didn't hit the signal again until it went out of the overbought and it went back in, right? So there you go. So now it's operating correctly, and it's only giving a signal when it goes into overbought or oversold once. Okay, so that's a big step forward. You now have the signal and it stopped the chart. Now when the chart stops, you can do a couple different things. You can enter the trade manually. You can just do like a sell order here, sell, and then you move the chart forward, and then you could exit the trade there. Oops, there we go. Okay, close order. Okay. Or you can do even more automation and you can create an entry rule. So what the entry rule does is it sets the trade up for you. It sets a stop loss, the take profit, and all that stuff. Now I could get into that, but there are a few default entry rules here. So I'll just use that because it's easier to illustrate. So one example is the last bar example. So let's go forward and see if we can get another condition. Okay, there. So this is now oversold, so I want to go long. So with this last bar indicator, there's a last bar buy, last bar sell, and then those are 1R. So if there's a 100 pip stop loss, it's going to target a 100 pip take profit. There's also a 2R, so it's just going to double the take profit. So what I want to do is use one of these. So I'm going to buy, let's do the 2R. So I'm going to drag that into the chart, and then it's going to put a stop loss below the current bar. There's going to be a pending buy order slightly above the bar, and then there's going to be a 2R take profit. So as you can see, you don't have to set up the trade manually. It's all set up in the entry rule for you. And this is not an ideal trade, but I'm just using it as an example, right? So let's move this trade forward. So it entered the buy, and then let's see if it gets stopped out or if it's gonna, okay, so it got stopped out, right? So the next one, I'm gonna do the same thing, buy again, drag and drop. And this actually has a, so let's take a look at this. This actually has a cancellation or an expiration delay. So if the entry signal is not entered within 3 bars, which is the expiration here, then it's just gonna kill the pending order and it's gonna keep on moving. So this ensures that you're not getting into trades that are moving against you. And if it does move against you, then it just cancels it out because it probably wasn't the right trade anyway, right? So I'm gonna move forward again and see what happens. Okay, so now it's overbought. So now I'm gonna sell with this 2R, and it's gonna set up the trade like that. And that one worked out. So as you can see, having these pre-made entry and exit rules can really speed up the process because all you do is drag and drop, drag and drop, drag and drop. And once the rule is identifying the setup for you, then it's very easy to say, okay, I'm going to take a trade, drag and drop. I'm not going to take a trade, pass, and keep on going. All right, now let's move into the next phase, which is full automation. Now, if you're liking this software, there's a link below that will give you a discount on the software. I'm an affiliate for them, but this is the primary backtesting software I use, and I really love it. So I'm only going to promote stuff that I like. So now we'll jump into fully automated trading. Now, there are 2 different ways you can do this. I will illustrate this with a previous backtest that I did, so you don't have to watch me set this whole thing up again. So I'm going to open a backtest. No, we don't want to save that. And then I'll do this RSI example. Let's do this one. Okay, so there are 2 different ways that you can do an automated backtest. Number 1, you can watch it play out on the screen, and I'll do that for you here. So let's restart the backtest. Okay, so the rules are on there, and then you can just start it up. And this has fully automated trading rules. So you can just watch it. And this is good because you can see what's going on. Like a lot of times with automated trading programs, it'll run the program, but you don't see the chart moving, so you don't know if it's actually executing the trades correctly. So this way you can just watch it and see if it's doing the right thing before you speed it up even more. So let's take a look at this for a little bit, and you can see the program in action. Now it's a little slow because I'm running this off of a remote desktop to my Windows PC, but it's a lot faster if you're running it right on the computer. So as you can see, it's taking all the trades automatically, super easy. And at this point, if I have verified that the trading strategy is executing trades like I want it to, then I can just stop it. And there's actually a way to speed this up even more. So I can go into Tools and what's called Fast Backtest. Now it's going to take this fully automated trading strategy, and I can apply this to any market, any time frame that I want. So let's say that I want to put this into the USD, or let's do the New Zealand US dollar. Now you can select multiple, so maybe I'll do the US yen also. So this is going back to 2003, which is great. Next, I can decide what time frame I want this to be backtested on. So I can do daily here, use setup rules, use real spread, and then you can go next. You can backtest this on other time frames also, and then you'll decide on which rules you want to use. So for this, let's see, I think I have one already set up, RSI 2, yeah. So I'm going to do long and short there, and those are the rules that I'm going to be using in this fast backtest. So I'm going to be testing these two currency pairs on this time frame and with these setup rules, and you can create a whole bunch of different setup rules, and that will allow you to test different iterations and different tweaks on your basic strategy. So with this, I just hit launch, and you'll see this start working. And I'm going to speed this up so that you don't have to sit here and watch this. And at the end, then I'm going to show you the results of the backtest. All right, I'm back. Now the test is finished, and you can see the results here. The USD Japanese yen had an 18.25% profit. And that might seem decent, but remember this went back to 2003. So on a yearly basis, that's not very good. But you can load the stats here, and you can see the results. So with this one, there is actually the potential to maybe optimize this trading strategy because it is profitable. It was profitable for most of the time here, right? It just dipped into the negative a little bit there. So there could be some optimizations that you could do with this trading strategy, and I'll get into that more in the next section, but this is just to show you that this fully automated backtesting works and that it's really fast. This took just a few minutes, and what you can do is just start it up, go have some lunch or something, and then come back and the backtest will be done. So it breaks it all down by month and year, and you can see overall stats and all of that good stuff that I showed you before. So as you can see, Sunday looks like a pretty good day with 80% winners, but those are only 8 or only 10. So not a very big sample size, but something you can still look at. So that's how the fully automated fast backtest works. And this is a great way to start building up, right? Because it can be very daunting to start at fully automated because you need to know how to program usually, or even with a program like this, you need to know how to use the row manager. But with this software, you can start with the manual, you can automate a little bit with the semi-automated, and once you get the hang of that, then you can put it all together and possibly make a fully automated strategy. Not all strategies can be fully automated, obviously, because there are some discretionary things like support and resistance levels that are kind of hard to program into a computer program. But this gives you a wide range of things that you can use and ways to speed up your backtesting process. So that is the fully automated part of Naked Markets, and I really like this. Again, the link is in the description below. If you want to get that, there's a discount if you use my link. All right, now let's get into optimizing RSI trading strategies. Okay, so in optimizing a trading strategy, there are a lot of things that you can do. Remember to only try one thing at a time, test it, see what the results are, and then change another thing. Don't try to change 2 or 3 things at the same time. Otherwise, you don't know which one was the one that contributed to your results, and which one maybe is detrimental to your results. So you want to add them in one at a time, or just test them one at a time. Have your primary trading strategy written down, and I have a free worksheet where you can do that. It gives you all of the things that you need to know about a trading strategy. And as you're backtesting, you can go through the checklist and then see if you should take a trade or not, and move on to the next trade, check, take a trade or not, etc. So with RSI, there are several things you can do. Like I said, the traditional one is overbought, oversold once RSI gets into that level. But you can also trade it so that you enter a trade when price exits the level. So for example, let's take this one here. You could enter it here or enter the trade here, but you could also enter the trade there when it exits the overbought level, because the logic behind that is that it's more likely to be topping once it exits. So that's something you can test. Another thing that people like, and I've backtested this and it had some decent results. It just had to be optimized a little bit. But another way that people trade the RSI is by trading the 50% crossover. So when price crosses that level, you go long there. If it crosses back down, then you go short there. And that's another thing you can try and test out to see if it works for you. All right, another big one is you can test the risk reward ratio, right? So you can set a stop loss above the last turn. So let's try that here. For example, this is long, this is short. Okay, so let's say that you entered the trade when price exited the RSI, right? So let's say that you entered it there, and then maybe you put your stop loss a little bit above, and then you went for a 1-to-1 reward to risk ratio. So that's going to be right there, okay? So in this trade, it wouldn't have worked out. But if you use a smaller risk to reward ratio, you're going to win more often. Usually, as long as your entry is pretty good, you're going to win more often. And when you're first starting out, I would recommend using a 1-to-1 risk to reward ratio, or reward to risk ratio, which is actually what it is. But we've been conditioned to say risk to reward. Anyway, so I'd highly recommend doing that on your first couple runs, and you can see how well the entry works. And then what you can do after that is you can start to extend the profit target. So you can go to like 1.5, maybe 2-to-1, right? So you would target something down here. Now you would obviously not win as often, but your winners would be bigger. So you have to figure out, okay, is that going to balance out and make this strategy more profitable? Some people like to do, bigger profit targets. I saw one guy target like 10-to-1 or something. He had a really low win rate, but his winners were really big. So that's something to test out. It's easy to do. You just take your stop loss and you multiply it by 2 or 3 or 4 or whatever it is, and that will give you your profit target. Another thing you can do is set a pending order. And this is something I learned from my friend Walter Peters. So let's say that you were going to go short on this candle here. So you would actually put a pending sell order there. So that's a sell stop, right? And then you would put the stop loss above here. So what this does is it makes sure that price is actually moving in the direction that you want it to move before you take a trade. So let's say that you put the order in there, but then price came up and it never touched that level. Well, then you just save yourself from a losing trade, right? So that's something you can take a look at. It can help, and it can make it much easier to be able to not get into these losing trades. Another potential optimization you could do is you could use a moving average on the RSI, as you see pictured here. So let's get rid of these drawings. So if price bounces off the moving average, or if it crosses over the moving average, there are different ways you can do it. And again, it really depends on what you like and what makes sense to you and what you test is profitable. So you could test it where you take a trade long if it crosses above, take a trade short if it crosses below, or you wait for it to go above and then look for a bounce. Now, the trickiest thing about RSI is where to put the stop loss, right? If you're going to use a stop loss, where should you put the stop loss? So you can experiment with different things, like you could use a fixed number of pips. you can use the ATR indicator, or the average true range, and that gives you the range of the past, average range of the past few days, and that will give you an idea of how much the market is moving. And some people use a multiple of that, or they use half of that, or something like that, to set a stop loss, and that's something that you can experiment with also. Okay, so another thing you can do is you could potentially add a moving average onto the chart and use that in conjunction with the RSI. So one popular way to look at this is to use something like a 200 moving average, and then when price is above the moving average, and you have a oversold condition, then that's when you enter a trade. So for example, in this case, price popped below and then popped back up again, went to oversold. So that's a potential indicator that the trend will continue going, right? Because it's above the moving average. So you might want to take a trade there and then have that play out, and you can set your profit targets accordingly. And then it would just be the opposite on the other side. You're looking for a overbought situation where price is under the moving average. So that's another way that you can potentially optimize your strategy. All right, support and resistance levels. This is another way that you can optimize your RSI strategy. So let's say that you remove those indicators. Oops, took out the RSI there. All right, so another thing you could do is potentially use support and resistance levels for your take profits and your stop losses. So going back to this example here, if you decided to take a long there, you could use this level as a take profit, because that's a nice resistance level, right? And that would have played out. And then for the stop loss, you could look for something maybe down in there, and you could use that as your stop loss, because that's a minor resistance level that broke through. So that could potentially be a good one. And then if you measure that out, let's say that you entered there, stop loss here, and then take profit there. So that would have been a nice 1.65 reward to risk ratio. All right, so my final tip on optimizing an RSI trading strategy is you could potentially start using RSI divergence. So that's when price is moving in one direction, but RSI is moving in the other direction. So for example, I see a divergence here. So price is moving down from here to here, right? But the RSI is moving up. So if we take this, it's actually moving up there, and this would actually go back to there, right? So that could be a potential long there. You could try a long at any of these points, and you could potentially have a very small stop loss at these points. And then when it finally takes off, you would make your money back and then hopefully have some profit on that. All right, so those are just some ideas on how to optimize an RSI trading strategy. Again, there are a ton of trading strategies out there. My goal with this video was not to give you a trading strategy that I like to use, but to help you create a strategy that works for you. And you can test all the strategies out there with the methods that I outlined in this video. So again, remember, it's very important to verify that a trading strategy actually has an edge. If it has an edge, that's something that you want to actually trade. And then once you have something that doesn't work or something that does work, you can try to optimize each one to make it profitable or to make it even more profitable. So this is the actual important step in learning how to trade. And as I mentioned, everything in this video does not require any coding. Another mistake I see in YouTube videos is that they do a very thorough back test, but they use some sort of software or a programming language that not everyone can use because it's super technical. Even I don't want to use some of those software programs. So this method, or the methods I outlined in this video, will allow anybody to start back testing, doing the fully manual route, semi-automated, or fully automated. And then you can do some optimizations on that. So if you found this video useful, give it a thumbs up, subscribe and hit the bell to get more videos like this. And if there's a trading strategy that you want to see me do a similar video, a verify and optimize video on, let me know in the comments below. Thanks for watching, and I hope your trading's going well.